Right, non-trading concerns. Okay, a trading concern involves in buying and selling of goods or services. Okay, a concern is an organization, right? So when it is non-trading concern, it is a concern, an organization which is not for buying and selling. Okay, it may buy or sell not for profit. Okay, not for profit, right? Uh, then what are the objectives of these non-trading concerns? It may be to promote the sports activities, or it may be to promote the art, it may be to promote the culture, or it may be to promote both culture and art, or it may be for leisure, or it may be for, if you're an animal lover, as I said yesterday, for protection of the, animals, or maybe the protection of the nature, the balanced nature, like, protection of the plants, somebody may be interested, right? So in all these objectives, it is not necessary that all the non-trading concerns will have all these objectives, but it may be one with one objective the organization may run. And in all these objectives, what is that we see? We see no profit motive. The intention is not profit, to make profit, but to serve the society in their own interested way. Okay, service is the intention. Okay, right. Now we're talking about, now straight away we'll go to the accounts part of these non-trading concerns. All right. Now I have given enough of examples of these, organizations and the objectives, right? So I'm not going to, it's just a recap of yesterday's previous session. Okay. Right, and when we go to the final accounts or accounting process, it is preparing the profit and loss account. Okay, and the profit and loss account, of the non-trading concern, it is not called profit and loss account because it is not for profit. Okay, but it is called income and expenditure account, right? In the profit and loss account, you may either incur profit or you may yield profit or incur loss. But the same, it is the outcome is same, but we don't call it profit, but we call it surplus. Okay, we call it surplus. We don't call it loss, but we call it deficit in case of non-trading concern. Okay, right. So for a non-trading concern, a typical non-trading concern, when it is recording, it records the transactions in a statement called, in an account called receipts and payments accounts. Receipts and payments account. What is that you receive when it is receipts? What is that you receive? You receive income, you receive liability. Okay. And when it is payments, what is that you receive? When it is payment, what is that you make? What are the payments that you make? Expenses you may make for procuring the assets, right? So receipts and liabilities, on the receipt side, income and liability; on the payment side, expenses and assets, right? So that you will get it through receipts and payments accounts. So these things we have to segregate. The liabilities and assets we have to segregate and prepare balance sheet. The income and expenses we have to segregate and prepare income and expenditure account to make out whether the company or whether the organization is making surplus or deficit. Okay, right. This is how we make. Right. There's a debit side, there's a credit side. The debit side, all expenses and amounts. The credit side, all incomes and amounts, right? And the outcome of this income and expenditure account can be either profit or loss. It can be either profit or loss. Okay, then comes the balance sheet. Then comes the balance sheet. The liabilities, the amount. The assets, the amount. Okay, pick up, this is your receipts and payments. pick up the liabilities and drop in the balance sheet on the liability side, pick up the assets and drop on the asset side of the balance sheet. Okay, but where is the complication? You can just copy it and paste here, right? But where is the complication? The complications lies in these points. The complication lies in these points. Okay, now till now, please let me know if there are any doubts. Then comes your, complications, irritations. Okay, these are 5 important terms that trouble these students. Okay, while you work out the problem, solution for the problem. So therefore, important terms of non-trading concerns. Donations. Okay, donations, right? Donations. What is a donation? What is a donation? Yeah, donation. What is a donation? It's something like gift, right? It's something like gift. Okay, donation. It is something like gift, right? So the donation need not be a very big amount, right? It need not be a small amount, right? If it is a small amount, okay, if it is a small amount, okay, then you treat it as income, right? If it is a big amount, okay, then you treat it as, okay, liability. Liability. Okay, donation, if it is small amount, take it in the income, right? If it is a big amount, take it in the liability. Both are receipt, whether it is small or big, it is a receipt, cash received. Okay, legacy. Legacy. What is a legacy? Before we go to legacies, right, again, sometimes donation can be for a specific purpose. Okay, it can be for a specific purpose, right? If it is for specific purpose, right, then you treat it as liability. Okay, specific purpose. Construction, procuring the cricket bats. Okay, procuring the cricket bats. Okay, I'm just trying to take here, fit here. Let me take C and D also. C. Yeah, for specific purpose, if it is given, specific purpose, if it is given, okay, then it is liability. Okay, right. For general purpose, if it is given, okay, general purpose, if it is given, right, then it is income. It is income. That's it. That's all about the donations. So when you come across the problem, if it is a small amount, compared to other amounts, if it is a small amount, petty amount, take it in the income. If it is a big amount, take it as a liability. But if it's a specific purpose, even if it is small, it is a liability. Okay, it's a liability. If it is, even if it is big, if it is for general purpose, then it is an income, right? This is all about donations. Let's come to the legacies. What is legacy? This is received, okay, received, right, through a will, right? Through the will of a deceased person. Through the will of a deceased person. Okay, to the will of a deceased person. Okay, died person. Okay, I know one of my neighbors. Okay, a thorough Bania. Okay, a Vaishya, right? Very disciplined man, and he has amassed 4-5 properties. Okay, just normal man, normal middle class, not even middle class. Let's say middle class. He was working in a company as a supervisor, right? So with his limited resources, he used to, set aside rupee by rupee, and he has purchased buildings, okay, lands, 4 properties he bought. Okay, he's got, and he also earned 3 wives. Okay, so 3 wives and 4 properties. And a year before the wife expired, first wife expired, 2 wives are still surviving, right? And maybe 6 months or so, 6 months ago or so, he also expired. Then before his expiry, he went to Yadgiri Gutta and he spoke to the trust people. Okay, what he spoke is, you will take care of me and my 2 wives. In exchange, I will write all my properties on the trust name. Okay, this is what he said. So they have agreed. They have agreed, and he has also given an undertaking. What is this? The temple might receive, legacy. Sometimes, if you go to Banjara Hills, just in front of post office, or the NIMS, Banjara Hills gate, NIMS, opposite to NIMS, there's a lane, small lane. And in that dead end of that lane, you will find Lama Khan. And that is an independent house gifted by a person who loves, literature, knowledge sharing and all this stuff. So what he did, he has gifted that house, dedicated that house only to carry out all the literary and cultural events in that particular house. It's a duplex house, right? He has gifted that. So what is that? It is a legacy. A building is received through the will of a deceased person. That's what he has written in his will. So after his demise, okay, that is given to a club, right? So that's called legacy. Legacy can be in the form of gold, can be in the form of, cash, can be in the form of land or building, anything, right? Then next one is subscriptions. Subscriptions. What are the subscriptions? Subscriptions may be, it can be membership fee, or it can be life membership fee. Okay, it can be membership fee or life membership, right? If it is simply membership fee, okay, this is income. Okay, income. If it is membership fee, okay, membership fee, right? Then life membership fee, okay, it's a liability. It's life membership is a liability. Liability, right? Honorarium. Honorarium is the amount that you pay, so therefore expenses. Expenses, right? So these are some of the important terms, right? Then you have important treatment, important terms treatment. Okay, we'll talk about outstanding and prepaid. Outstanding and prepaid. Prepaid. Okay, outstanding expenses. Okay, always it's a liability. Outstanding expense, always it's a liability. Okay, and if the outstanding is income, you have earned the income but you didn't receive, then it is an asset. Any contentions? If the same is, if the same is for prepaid, for the income, if the income is prepaid, okay, it's a, if the income is received in advance, okay, here prepaid or received in advance. If the income is received in advance, then it is a liability. It becomes due, salary becomes due after 2 months, but you received in advance. That's a liability, obligation. So if the expense is prepaid, it is an asset. it is an asset. If the expense is prepaid, it is an asset. Okay, outstanding expenses, outstanding expense, liability. Okay, outstanding income, asset. Okay, prepaid expense, asset. Okay, income received in advance is a liability. Any doubt? Any doubt here?
No, sir.
Okay. Next is I just want you to take through one more last point of adjustments, right? Now let me categorize ending and beginning. Ending and beginning. Let us say, yeah, if there is an outstanding expense, okay, expense, okay, outstanding expense in the beginning, okay, outstanding expense at the end, the closing outstanding expense, right? Then what you have to do is, right, it is added to the expense, right? Then it is a liability. Closing outstanding expenses, if you happen to see, right, add that outstanding to the respective, let's say outstanding salary, add that outstanding salary to salaries. Okay, then outstanding salary also is a liability. Right? Did you understand?
Yes, sir.
Okay, next. Similarly, outstanding incomes. Outstanding incomes, okay, is equal to, what's the treatment? Now you will add that outstanding income to, okay, the respective income, and it is an asset. Whatever it is, whether it is outstanding expense or income, outstanding is added to the respective item, whether it is expense or income. If it is outstanding expense, it is liability. If it is outstanding income, it is an asset. It is an asset. Okay. Similarly, if it is prepaid expense, okay, prepaid expense, right? If it is prepaid expense, then deduct from that expense, okay, deduct from that expense, and it also becomes asset. Okay, it also becomes an asset, right? All right. Then next is prepaid income. Prepaid, okay, I'll say prepaid instead of saying prepaid. Just for commonality sake, I'm writing prepaid. Actually, income received in advance. Okay, income in advance. I'll short it like this. Actually, it is income received in advance. If that is the case, right, deduct from that income, okay, then also it becomes liability. Okay, liability. Liability. Look at this one. Come again. Yeah. Outstanding expenses, add to that respective expense and it becomes liability. Outstanding incomes, add to that particular income and it becomes asset. Prepaid expenses, minus from that particular expense, respective expense, and it is an asset. Okay. Prepaid, okay, this is only for you to, because we are using outstanding and prepaid, I've written here, but actually it is income received in advance. If you happen to come across this situation, less from that particular income, then take it into the liabilities of that particular liabilities of that balance sheet, right? So all this treatment is for ending, closing, or ending, closing, closing, right? Any doubt here till here? Yes, please. Any doubt here? Yeah, this is very technical, right? If you understand this, you can fit any problem in this, in these 2-3 pages of hints we are discussing. Any problem you can fit here. Yeah. Shall I go ahead? Yes. Praneet. Okay. Now I just want to know whether you're there or not. The last part. If these items are the same items are on at the beginning, okay? If they're in the beginning, how do you treat them, right? Outstanding expenses, right? What will you do? Outstanding expenses, if they are in the beginning, okay, just make opposite, less from that particular, okay, expense. Then it becomes opening liability, okay, right? If it is in the case of income, then also deduct from that particular expense, income, then it becomes opening asset, OA, right? If it is in the case of prepaid expenses, right, you add to that respective expense, then it becomes opening asset, right? Asset, right? Opening asset, right? Then if there's an income received in advance, then what you have to do is add to that respective income, and it becomes opening liability, okay? Opening liability, right? So this is all about the adjustments that you may come across and the treatment that you have to give, right? This is the crux of the entire, okay, non-trading concerns problem. You can just fit any non-trading concern problem in this. Only thing is you may get confused, confused of using these technicalities. Otherwise, there's no way that you go wrong if you just follow this order or sequence, right? So now time for questions and doubts.